All right, so up next we got the most important chapter of this whole course. This is risk management. So without this, it's impossible to be profitable. No matter how good of a trader you can become, using this software, using these strategies, um, is just simply impossible to be profitable without risk management. This is what's been holding me as a trader for a very long time, and this is what some people get naturally. I didn't get this naturally, unfortunately, but so therefore it's important to lay out everything that is very important to follow. Now, the risk management in this case intersects with trading psychology because there is always going to be that psychological part of you that will want to break some of these rules. And every single day when you're gonna come in to trade to scalp using Moonbot and using our software, you have to absolutely follow these rules. If for some reason at the end of the day you find yourself not following these rules, you gotta sit down and analyze your behavior, and you gotta do self-analysis. Okay, why did you breach that? If you haven't breached that, would the outcome be different? So once you start asking those questions about yourself, that's what helped me to follow these rules a little bit more strictly. But again, the psychology will actually will keep you from following these exactly. So let's start with a few really basic ones. So these basic ones is what I found again successful for myself. So first of all, fixed maximum loss per day. So you absolutely cannot go over this number. Usually this is 1 to 5% of portfolio. So 5% being a little more aggressive number for maybe smaller portfolios. Like for example, if you have a $100,000 portfolio, right? Well, so first of all, before we even go there, you should not start with large size. Like it doesn't make sense with this way of trading. It does not make sense to start with high numbers because it's just like most likely you will have some losses the first few months, right? So it doesn't make sense to lose a lot of money, in my opinion. So the for example, the portfolio that every single successful trader with this way of trading started with minimal amount, few $100s, maybe $1,000, and these people who are successful with this now have portfolios of hundreds of thousands of dollars. What you will find with this strategies is that once you get it, to multiply this to a very large amount is going to be really quick once you get it. So therefore, it doesn't you don't need a large amount to start with. Now, um, but hypothetically, for example, people that have $100,000 portfolio, their maximum loss per day might be 1%, right? Because they are like it's a little bit more conservative in the sense that these people know that okay, so once I'm losing that $1,000 or 1%, right? Compared to my order size, because the order size don't grow at the same rate as the portfolio. Order size grows much smaller. As a percent of order size, that number will become likely larger. So for someone new, starting out with 1 to 5% is good. You just pick whatever comfortable within this range, but do not go over 5% for sure. Fixed maximum loss per coin, per order size, per idea. So these two go hand in hand. Usually the order size, so the order size in futures and spot is quite different. So in futures, order size should not be larger than your full portfolio. So for example, your portfolio is $1,000, while the maximum order size on futures is $1,000. Um, the maximum position though can be 3 times the order size. So maximum position of 3 orders, and maximum order size is basically 1 to 1 with your portfolio. So portfolio $1,000, maximum order size $1,000, but maximum position is $3,000. The maximum position in this case is achieved by confirmation of your idea. I will show you in a second on the chart what that means. So hang tight. Now, you're gonna have a maximum of 3 tries per idea. So the idea is, so what you will find, again, goes back to psychology of trading. You will be looking at the chart, and then once in a while you will get these feelings like, oh, I want to predict the price, or I think the price is gonna get here. So as soon as you think something, That's when you know like that should not happen, but it will happen. Inherently, it will happen. But let's say you got an idea that the price will all of a sudden pump from here. Like I feel it, the price is gonna start increasing. You're gonna have a maximum of 3 tries per that idea. Once the 3 tries are exhausted, you are not gonna trade anymore. You're not gonna trade that idea anymore. You're gonna step back, and even if the idea is at the end of the day is gonna work, you will not develop this FOMO feelings like, oh, I missed out on this idea, right? I should have tried more. Like, and now again, I will show you in the chart in a second why. So yeah, so the maximum orders it's the maximum loss per coin per order size. Let's say our order size is $1,000 and $1,000 portfolio. Um, we we let's say our risk tolerance is 5% of portfolio, so that's going to be $50. So the maximum loss per order size in this case is usually 5 to 10% of the order size. So like on futures, you can lose up to $50. When I say 5 to 10%, the 10% can be on spot. But then again, 10% is very aggressive. I'd recommend starting with 5%. Now, on spot, however, you have a portfolio of $1,000. So in this case, the maximum order size is maximum position size is a third of a portfolio, but maximum order size is the 10% of portfolio. So for example, you have $1,000 deposit, you will be getting a maximum position of up to $300. Sometimes once you're gonna get comfortable, you can push it to $500, right? You can push it to half of the deposit, but definitely no more. And again, that highly depends on the situation. There will be once you're gonna be getting advanced, there will be situations where you can push that number even further, but that's a little bit more advanced kind of stuff that which you will have to develop a feeling for. For now, um, a third is the max of like $1,000 portfolio on spot, $100 order size. You can get up to a maximum of $300 position, maybe $500 position if the conditions if the conditions allow it, and I will also explain how to identify those conditions where you can push the order sizes a little bit more. But yeah, and then so the maximum loss in that case is going to be 5 to 10% of the order size. So if your order size is $100, you're not gonna lose more than $10 on that coin on that coin in a given day. The reason why is because if you are finding yourself losing these percentages of the portfolio or of the orders, that means that this situation is not tradable. Like it might look tradable, but it's not. The idea in scalping is to understand when it's not tradable as early as possible to minimize the losses, right? Because if the coin is tradable and it's makeable, like the money is makeable in that coin, you're not gonna have negative trades actually. Like maybe like one or two here and there, but you're not gonna have losing trades like because it will just simply work. But once you starting yourself see like this struggling, the ideas are struggling to materialize, it's likely that the coin is not tradable. So I talked about the maximum number per day. Yeah, so the understanding what your maximum loss is on a coin at any given trade is very important. So what that means is that coins move in a different ways. Some coins move very smooth, right? They give you, for example, the coin drops 5% in a few seconds. It creates a small spread at the bottom and then like really smoothly goes back up. So whenever you see those kind of movements, right? You're if in case that idea is not going to work because the coin moves smoothly, you're going to be able to exit into liquidity. You're going to have enough liquidity to exit. You're going to exit really quickly and easily, and it's only going to be a small percent loss, maybe even break even. So, but there are coins that move in kind of accelerations that are not able, like they're just not smooth. I will show you in a second what that means as well in the chart. We're gonna go over every single one of these on the chart. But understanding like okay, if this is gonna go against me, what is my exit plan? So always have an exit plan. What is my exit plan, and how much am I gonna lose if this gonna go against me? This also applies to environments of very high deltas. So for example, you have some news came out and the coin just goes 20% up, 30% down, 10% up, that kind of stuff. So there, because it moves so fast with such high deltas, if you are wrong, you're gonna be carried down few percent actually if you're wrong. So therefore you have to account for it and you have to adjust order sizes accordingly. So if my portfolio is $10,000 and my order size is $3,000, for example, um, um, I'm not gonna go with a 3,000 order size probably on those kind of moves. I'm gonna go with like 1,000, right? And if the idea starts to work, I'm gonna be filling up my position a little bit more. Again, we're gonna go over on the chart through every single one of these. Accounting for spread, that little white area within the order book is spread. So you have to account for, okay, this whenever that spread becomes large, do not just market ape into like a certain idea, right? Always try to fill the position as close to the green side of the order book as possible. You gotta watch how much money is in the order book compared to your order size. This is very true to exchanges like Gate and sometimes by BitSpot. For example, if on Gate, for example, um, you might have very high deltas where a coin gives waves of 20% growth. However, the coin has like within 5% in the order book that is only $1,000, right? Therefore, it's very risky to fill a position that is worth $3,000 because your potential loss is going to be quite a lot. And then the most important one is this goes back to know what your maximum loss is on the coin. What you gotta also know, what is the potential of this trade, because there are trades where the potential is 1% and there are trades where the potential is 10%. Very often we are trading coins that have a potential of 1 to 3%, right? Really quick scalps. So for those, you gotta have to be very, very precise in your entries because your upside is only 1 to 3%. So therefore, the you gotta be almost 80% sure that this coin is gonna at least give you an opportunity to exit break even, and then your loss is not gonna be more than like 0.3% because you're gonna try 3 times to catch a 1% move, and you're gonna break even, right? So what's the point? The last one is, and I actually just touched on the last point. So the last one is very important. So really, if you master this last one, if you understand it, and if you have it in your thoughts every time you look at the chart, you're gonna be a profitable trader. Like I can guarantee you that right now. This is literally the only thing that you need to be profitable because with this way of trading is going to be, you will find that it's very easy to identify tradable situations. It's all kind of the same coin to coin, slightly different coin to coin, but the concept is going to be the same. You're going to find yourself like, yeah, you're able to spot this after a month of trading. You'll be able to spot all these situations. But the last one takes time to master, and this is the hardest one to master. So let's talk about it. So the ratio of potential but possible maximum loss times average number of attempts per idea. So you're gonna have, for example, an idea, and you have to know a ballpark approximately. If this is gonna go against you, how much you're gonna lose? Oh, okay, so this one I'm gonna lose like 0.3%. I have this trade, this coin dropped 15%. Therefore, I have a solid potential for like a 3% bounce, right? So therefore, if I try 3 times, and I'm gonna lose approximately like 0.3. In the worst case scenario, I'm gonna lose 0.3% per trade, but I'm gonna get a 3 to 5% move, for example, right? That's worth it. I'm gonna go ahead and try this. But the trick here is knowing what's the possible maximum loss, what's the average number of attempts this sort of idea and this sort of movement will provide. And then the third component is like how much on average this particular move might yield. So these three come with experience. This one is pretty hard to teach just in the course or in a video. I would say even impossible. However, we can give you all the tools to minimize the amount of time that you're going to be searching for these numbers yourself. But you gotta, every time you come in, every single day, you have to come in with the thought, okay, I'm gonna need to find these numbers. I need to remember them. I need to write them down, take some screenshots. This is why in our Discord trading group, I encourage people to share your trades, share your screenshots. So, and then you gotta save these screenshots to go back to and reanalyze them. So, okay, we covered quite a bit. Now let's actually jump to the chart and then look through some of these on the chart. All right, so now let's look at some charts. So the first two are the first 2 points that we talked about were maximum loss per day and fixed maximum loss per coin per order size per idea. I'm not gonna cover those in the chart because it's gonna be those are just hypothetical, and again, you can tune those numbers yourself. Now let's now talk about understanding what the maximum loss on the coin at any given trade. So, for example, let's pick this coin, right? This is a new listing on Gate. This is a very common formation where the coin starts to grow, creates some sort of highs, and then retraces, tests those highs, trying to in attempt to break them. So this area creates a tradable situation. Okay, so this is at least because what happens is with these coins is that once this area of resistance is broken, you have a very large move to the upside. So in this case, we have a 30% potential. And the reason why I say 30% potential is because new coins on Gate, new listings on Gate, move move walls to walls. So I'm looking at the first significant wall, and that's kind of my target. So let's look at the potential. Let's look at the potential loss on this trade. So first of all, when I said account for one of the things I said is account for spread. So this white area is a spread of almost 4%, right? So if I, for example, decide to market enter right here, if I market enter, well, in this case, actually, I had a small order size. If I had like even if I had like $1,000 order size, my order would be here, right? And then let's say my idea is that, okay, out of this spot, this is it. This is out of this spot. This is where it's gonna go towards that wall. I gotta know what my exit plan is in terms of if it's not gonna go. So I know if it's not gonna go my way, the way I'm gonna know that is if the coin will break this area, this small wall, and then create a shot through the order book. So I I entered at 4% there, then at the 4% thread there, spread there. So I already know that my potential loss could be 4%. This one is gonna also go down a little bit, and below that, so maybe 5% when I'm gonna say, yeah, I want to exit this trade. And once I exit this trade, there might be not enough money for like $1,000 order size uh, to actually cover me or to fill me all the way. So in this case, that creates a risk of almost $60 in my mind right away. So therefore, that alone is not a tradable situation for me, right? This is how I identify, even though I have an idea, right? Even though I have an idea, but let's say I really want to trade it. I really want to trade this idea. How can I still trade it? I can I can try to fill out my orders as limits, and I might say, yeah, because this is going to be pretty close to the green side of the order book, so I'll have some liquidity to exit, and then this is going to create a little bit more buffer, right? It's not going to I'm not going to be market entering anymore. If I'm able to fill this position, like in this case, it looks like they filled me for what? Oh no, they didn't. Never mind. So if somehow I'm able to fill this position, um, it's gonna be, yeah, sure, happy days. But if not, you gotta stay put and not try to, like, if the coin is all of a sudden starts to go, you gotta just let it go. You cannot just be market aping because you experiencing fear of missing out, right? So again, so this is we covered. I'm gonna close this. So we covered all right, knowing your kind of possible maximum loss in the coin in a given trade on gate, assuming the spread. Now let's find something on futures. So futures is quite different. Um, so the two things I wanted to, yeah, so this is good. This could be a good one. Let's say my idea is that I want to short the coin. So the coin grew a lot, and let's say that I want to short this move up. Well, based on the previous movements on the coin, you always, for the risk management purposes, you always got to look in the past. What kind of moves did the coin show you? So in this case, the moves are very abrupt, right? So if I were to try to short this, let's say I don't care about the $100, but let's say I want to short right there because I think that the coin will go and retest this area. In this case, my upside is only 1%, but if the trade is going to go against me, I'm looking at the order sizes of $30,000 to $50,000, and if this is going to go against me, $50,000 takes me almost 2% up. Well, the reason why I say if the 50,000 is going to be probably even further, but usually it doesn't go the full 50,000. But let's say it's going to go to here. So in this case, I have the risk to reward ratio is like even less than 1 to 1, right? So therefore, it's a bad trade. My potential loss here is very big. This is why we don't trade moves like this that are so abrupt, right? Um, because my and then we also size the order accordingly. Like in this case, I sized only $100 order, right, to essentially minimize the loss in case this is gonna go heavily against me. Because if it will, it's gonna carry my kind of stop few percent up. So the potential loss is gonna be pretty big. Now let's find a token that has this was examples of abrupt movements. Even this movement is pretty abrupt. Uh, these are not like very tradable situations. Let's say we find something that is smooth. Popcat. All right, so this coin I've been trading for a little bit in the last few days. You are able to see that, okay, even though if this coin does provide accelerations, but in this coin you can enter with a larger size because it's actually smooth. So for example, look at the acceleration right here. So we go from the bottom up, we go 6%. This 6% happens in 708 to, so this happens in 10, this is in 10-minute time. This is not acceleration, but let's look at this one. So it's 13 to 18. So this is 5-minute time. So in 5 minutes, it grew something like 5%. You might say, and then, or even here, 29, 21 to 34. So in 5 minutes, it grew 7%. So this is a decent acceleration. So let's say that acceleration like this, let's say we want to short it. Let's say you want to short this acceleration. Well, if you enter at the tops, which with Moonbot you can enter the tops, it does give a small pullback, but it does not give these kind of accelerations that will push your stop further. So therefore, if you want to trade, again, I'm not saying this is tradable, but if you wanted to trade these to short it, you can go with the larger size because you know that this coin, based on its previous movements recently, is gonna let you exit at a small loss or at somewhat of a break even if you enter precisely. So this is an example of a smooth movements where you can size your order up a little bit bigger. Oh, this is interesting. So these kind of moves, again, for the risk management, this is very dangerous moves because you don't know where it's going to stop. So whenever you just see a growth like this, so first of all, the coin out of nowhere, 15%, and is growing like this. So just market buys. Sure, it starts to curve down. So this one goes back to this coin goes back to, okay, how many tries is it gonna take me to for my idea to work. So in this case, the amount of tries are going to be a lot because it can exhibit this behavior for forever, right? It's going to be exhibiting this behavior forever. So therefore, like I'm staying away from this. The only tradable situation here for me is acceleration in one candle, 15-20% or something like that. Or if the coin accelerates down the same way. So, and this is also a good one other thing that is a good example in this coin um, is the mark price. So see, this orange line right here is the mark price. There's going to be situations where you will see that this mark price is way high. So for example, the price is here, but the mark price is there, like 10% up. Therefore, you got to know that, okay, if I'm trading with 25 leverage, then if I short this coin, I'm gonna get immediate liquidation. Okay, that's also very important for risk management purposes because you don't want to you don't want to be just being liquidated every time you're trying to short the coin. So always look at this mark price. That's very important. Um, yeah, this is not tradable. What we call this somewhat of a chainsaw type of movements because again, it's not very clear where to enter and where to exit. It's because it just gives kind of random moves up, and you don't really know where it's going to start from. So this is even if you're able to get a few successful trades, um, you it's not sustainable because one time you're gonna get them, one time you're not gonna get them. Even if I really wanted to trade this coin, for example, let's say with $100, I'm gonna enter on the stop of the price, and let's say my exit plan is when the coin stops the move up. So in this case, this was a little bit over a percent trade, right? We put a lower high end, so I know that okay. Um, I'm not gonna try again right here because this can easily break it down. So, but let's say the idea in this case was that we're gonna go on the for the new highs, right? So the idea is that for the new highs, it's $100 order size. I'm gonna allow myself for this kind of movements. I'm gonna allow myself maximum of three tries for an idea. And by the way, you see these kind of faded away movements. This is a good example. Dots is these faded dots is shots is the spot trades. So see if this one right here is this shot through the order book right there. So this way you are able to see where the spot price is at compared to futures. A lot of times what you'll notice is that the spot price is much higher than futures or vice versa, and those create different tradable situations. But this is about risk management. So again, now this coin starts to kind of come down. I just don't really see a tradable situation, to be honest. Like, I mean, sure, this kind of creates small waves. So maybe whenever the next time it's gonna do a 2% drop, I might try to do a 1% retrace. So this is kind of so again, in this case, it's 1 to 2 risk reward ratio, right? So I'm risking. So the drop, well, no, so the drop is 2%. The potential rebound is 1%, but actually my potential loss in this case is also 1%. I'll tell you why. Let's say I'll tell you why. So for example, um, just give me a second. Let's find a trade. So let's find the first retrace down. Uh, Again, I don't care if it's going to be a loss. I just want to show you why this type of movements is one time or 1% loss potential. Well, the reason is because because of the spread and because the nature of the movements is sporadic, right? So it just gives these random waves, random accelerations up and down. So therefore, if you are wrong about it, by the time you exit, you're gonna lose 1% of your order size. So let's see. So let's say that this is coming up to resistance, and I want to exit. Oh, sorry, I want to short it. So, and my target is here. But if this is going to go against me, and the way this is going to go against me is that I will see that the coin starts to move up. So technically this didn't go against me yet. Okay, well, this was a profitable trade. So let's say I want to enter here. All right, see, this is going against me. I'm out. Um, this creates $0.88, so 80 cents, almost 1% trade. Because see, by the time I realized that this is not a good trade, because even though it did create an acceleration down that I talked about of like almost 2%, um, it didn't provide the balance. So by the time I exit, it carries me over about 1%. Comparatively, um, if we go to PopCat, if I enter with the same $100 size, let's say I want this to go up. Uh, let's say I want this to go up. If I'll be able to, the nature of this moves, if I'll be able to understand if this move is actually going to be profitable or not pretty easily. Is that if it's not going to break this, well, in this case, it might go for a percent move, to kind of test this area, right? To kind of test this area of resistance. But if it's gonna go against me, it's gonna be very, very easy for me to tell because it's gonna go below these two highs, right? So see, because the move is much more smooth, I'm only losing zero. I'm losing half of what I was losing on the previous coin. So basically, these kind of moves, these kind of dynamics is what you're gonna have to master on your own. But again, we will be helping you with these in our Discord channel. But hopefully this was a good enough example of smooth versus abrupt movements. Let's move on to the next one. So yeah, we talked about maximum tries per idea, we talked maximum potential. So this goes back to our equation. So remember our equation, the ratio of possible maximum loss times average number of attempts per idea divided by average percent move this particular trade provides. So we talked about possible maximum loss, how to identify it, how to identify the ballpark of it, um, and average number of attempts. Average number of attempts per coin is very different situation to situation and coin to coin. That one in particular comes with experience. And again, just trade as much as you can every single day. Average percent move this particular trade provides. So that one, and this is interesting. So another good example. See, I'm only $100 size, but because the nature of movements is so sporadic, I gotta know that okay, this is gonna be even over a percent loss. Again, these are not tradable moves. This is just more of an example of okay, I have an idea. I want to short this. What kind of risk management to apply here. But let's go back to average percent move the particular move can provide. When you trading gate coins, and sorry, let's go back to this coin. When you trading coins on gate, my average percent. So I know this situation. The coin just got listed. It's at the highs. When these highs get broken and then we starting to see increase in the volumes, I know that average percent move this particular trade will provide is 20 to 30%. So in this case, the potential is 30%. So therefore, I'm gonna even market enter when I will see volumes, for example, because I know that okay, I'm gonna try this idea maybe on 5 different coins, 5 different times. Out of those 5 different times, two are gonna be a loss, and two are gonna be a loss on $1,000 order size. It's gonna be a loss of $50, for example. But the other 3 times I made $300, right? So the risk reward of this particular situation is very, very favorable for me to try these trades. However, uh, when you are shorting fast accelerations, your maximum average percent moved on a particular trade is usually the percent of the acceleration up. By acceleration up, I mean if this coin just stays right here, let's say it goes from here and it just squeezes up 40%. So I know, without any sort of pullbacks in one candle in a few seconds. So I know that you will see that using this bot, it will be very easy to enter right at the top. Now my potential in this case is pretty high because it usually retraces a certain percent of this move. So the higher this move, the higher the potential. So therefore, I'm gonna enter here, and I'm gonna likely take the first retrace. The first retrace that is gonna be a third or even a fourth of this move up to be safe, or whenever the retrace stops and then the coin starts to form the bottom here. You will see those kind of trades in our Discord and then in further videos. But this is just example of average percent, how to spot the average percent move the particular trade provides. What I'm trying to say is that it's going to be we will be covering these kind of situations in further chapters. But again, the most importantly, this should come from your own experience. Again, we will guide you on how to find these as quickly as possible, but you gotta rely on your own experience. That experience comes with screen time. So you gotta be next to your screen every single day trading, and discovering these numbers for yourself as well. So okay, I think that was a good risk management chapter. Please reach out in Discord if you have any further questions on these, but we will be going deeper into these situations in further sections of the course.